Hi, I hope you're well. I'm going to give you a review of today's price action Monday. Well, I was doing it earlier. A bit detailed, and unfortunately, there was a power outage, and the recording cut off when it was about midday of the price action. But well, let's start again. It was quite nice overall, and everything started to happen from the area that I mentioned to you in last Friday's review. Well, on Friday I was waiting around here with an alert, this origin of a higher time frame around here. So nothing, the market on Friday didn't reach it. It just took up positions after a week of upward distribution. And when I got here on Sunday, casually at midnight, I decided to look, and just the price was around here, touching its 30%. I wanted to see how the market would open for the new week, and the price was already around here. So I managed to catch some shorts with some micros by. I don't trade Asia, but it was a zone and a level that I had been waiting for quite a bit. I had quite a lot of confidence in it, so I placed some micros there, and that was it. Asia arrived around here, mitigated that 30%, and got here too. The last swing zone we had, right? This is a 1 minute chart. This is the high that breaks with the body, and this was the lowest point between the two highs. We have the responsible one, the price reaches that responsible one, and this little zone that would also be like the one containing the responsible at its 50%. And he tried to make another distribution, but didn't succeed. And on the contrary, he ended up breaking it. With that, he finishes dropping to 50% of the entire zone. I think he didn't touch it by very little, but oh well. And here we had some quite linear impulses like the trend we've seen that eventually gets swiped. And here the price ends up falling. In London, it comes over here to 50% of this responsible one on a higher time frame. You already know there's no need to go up in time frames to see higher time frames. From a minute, just doing it this way, what would be the responsible time frame becomes quite noticeable. Where the price spent the most time, where the highest volume and the highest amount of movement was, that's going to be the responsible time frame. So to take out this swing hike, the price gets there first to its 50, then it reaches the 30, but isn't able to overcome this. Then the 50 comes, and that has been a boost, gives a boost to where, to the origin of where the change occurred around here. Then see how the price is doing, that ping pong. So it keeps boosting, closes with body, retraces, another boost around here. So this whole rise is that last upward movement of a higher time frame. And see how it is the 50 of this goes to the 50 of this that was left unmitigated. See that since we took out this low, we didn't retrace to the area. So the price reaches there, liquidates everything, and comes for what's left unmitigated, reaches here at the 70 again of this area, attempts to go up, but can't overcome the previous fractal. And it keeps falling. Where to now? Full swing area. This is the hike. Lowest point between both hikes. This one had a higher time frame, and this one is right here. So it's 50%. And in other words, this first fractal retracement surpasses the previous continuation, and then the price ends up going here before the open. I remove this from here, Before the open, the price starts to stay around here. And here is the complete model that I trade at the open. It's the one I have shared so much when the whole narrative is there. And there's a price magnet. So what happens here? The price validates this area, which is responsible for taking this out here. Validates this area as it comes and makes a first tap and then continues. Now it's validated. I keep it. The area is not low anymore. You know that the first tap doesn't necessarily have to be respected. And then comes the second tap to swipe it and reject it. And that one gives another continuation. And they come swipe here again with rejection, and look at the flip. High, low, low, high. Retreat. And the price finishes moving with the opening. So what does the opening do when the entire pattern is developed from an area? The price accelerates towards the magnet. If the pattern isn't set, the price will either fall or seek the pattern or sweep something. Then it shoots up. It happens here, reaching the opening, then immediately moving up to 50% of the previous left area we sought. So there's 30% issued in Asia, London, then 50% at the opening, but that 50% can't surpass this small origin. So it comes to seek the 70, and with the 70, it makes the complete structural change, and even in a higher time frame. Then it makes this entire drop, reaching the point of making a double bottom over here. Sweep this, due to some ticks that had been developing on Friday, from an area over here. So look how it sweep this, protects the origin of that area, from which it was generated. And again, and here is where it gets interesting. SMT. At the moment, I saw this rejection and saw that here in the S, this hadn't taken out that low, and the London low, which is here at 6. Look how Nasdaq took it out by a lot, while the S hadn't taken it out. Look how there was a strength to say that this isn't going to melt down linearly, like we saw in the drops a couple of weeks ago. This lets us say that the price is looking for something to make a bullish move. Sure, there's the change of structure, everything, but I'm talking about when this is happening live. You don't know what's going to happen here until the price starts giving you clues, but at this point, it makes a lot of people panic or chase the price. So, what ways are useful to know if this is really going to be a price meltdown? That's where context comes in, market profile, are there volatile news or not, is it a Monday, all those things. And this SMT helps you to have more confidence that the price isn't just going to take everything down. So when I notice that, I say, alright, if we close above this, we'll at least mitigate the levels of the swing area. So we have a higher time frame swing here, which turns this into a higher time frame swing. So this entire area is the shift of a higher time frame. And from there, they will be the first magnets to mitigate. You have to go step by step. I can't go straight to the origins, because that's the last thing we'll get to. First I have to go door to door. Then I take the whole area and start working with that. And, well, in the S, this area over here was left out, but since I hadn't removed this, it hadn't given me such a clear area. Simply this last upward movement around here, that made the rise, is the only thing I have. that had reached its 30%. It tried to pull back, but nothing more so. In the Nasdaq, was working well with the whole swing area. That's where the longs came from. The price didn't get to this, so when it started to pull back here, the price I already know is not well mitigated, the magnet, because that there is no responsible fractal that has touched around here. It already passed this. There's no longer reaching this. So when the price is like this, I somehow feel or have that intuition that it lacks momentum. So that's where I get the idea of the trap that doesn't touch the level, all that, and it starts to make the trap that I show you around here. And with the touch of 50% of the swing zone, plus a responsible that comes out here after the opening, a fractal that was there gives us the liquidation of that trap. Let's look at it around here. It's here. This previous area remained. It starts to be this line here. Well, in fact, it did it first here, smaller. Now that I remember, with this area, it valued this area. Returns to it, it starts to be this. Look how it takes everything out. And although the price comes and gives you some reaction points here from this supposed flip, you know what I've told you. Look, it's a rejection. It wasn't valuable with body. Then the next one rejects like this. Lots of wicks. A very clear trend line liquidates that to come and make a double bottom. And ends up taking the high again from those who shorted from this supposed flip. And over here, it does reach the 50 of the swing area that I had told you about with this fractal. It touches it to the tick, and there, it takes everything. It takes everything and goes down to mitigate this area at this point. It was quite strong, so I was already expecting him to start breaking areas that were confirmed by order flow in a bullish manner because of what I had told you here. He is empty. So one live at this moment, when the change of structure to the downside is happening, wants to be careful and wait for it to start confirming in another direction. So here it comes and mitigates this. Then I think it touches 30% of this origin. Now if I look over here, this is the lowest point between this high and this one. It indicates that there's a chance for reversal or bouncing back up, because these points often act as significant indicators in the market movement. I almost couldn't reach it. I'd almost removed the area over there to the left. And it makes this entire shift from the swing area that had already mitigated. It makes the whole shift here. Then it clears the trap. Starting from this point, it covers this area here with this small imbalance. You know, I don't use imbalances in lower time frames. It removes this, and from there, it removes this. So the flip is much clearer that way. You know, when there are very linear movements in one direction, we don't want to fall at the first. Flip for a candlestick pattern that we want to at least make a false flip that changes the narrative of order. Pluto, also with the price, starts that it's an hit, makes the change, and starts, it is of ping pong. So sweep this, comes and touches now if the 50 that remained unmitigated, and once the 70 touches around here, the origin of this zone, where now a flip in 5 seconds comes the 30 returns to flip. The 30 comes here and returns to the flip. The 50, starting from the 30 of this, and from there, that takes us to the 50. Now from the top, that comes and rejects. See this? How the candles look in 1 minute. Very beautiful. When the candles start to look like this, from a level, reject, 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 and is touching the responsible, that opposite candle, before coming and breaking here. It is mitigating at once the responsible. And there it starts again, the delivery perish, and it had stayed that around here. This origin, so now this, what does it become? In which we are already touching the optimal zones around here, and the ES was already at the peak in that origin. The ES had already reached the limit, so the only thing we had to wait for was that shift. The ES gave it very, very clearly with bodies in the Nasdaq. We had some rejections because there was an area by order flow. But look how one supports the other. And already when you see that, it starts to be delivered. Since you have a target, all these logos. And if it breaks the area, that is confirmed by order flow. What is our magnet? What was left unmitigated below? Well, we liquidate everything, and there the unmitigated area becomes the area that will give us that good reversal. And look here again, how this starts to show quite a marked trend. Because when a key level is touched, something unmitigated, we want it to break with those marked trends. And this is how it starts the journey in another direction. I am sure several of you have noticed this in 5 seconds. Also, the price making small 5-second fractals. So it even gives you that feeling of wanting to chase it. And suddenly it comes and makes a strong wick to touch something here and takes out the first hikes. And it becomes a quick pullback and then goes. So that's exactly what we want whenever we see this. Sweep targets, something unmitigated by touching that. And we want the break of this high, at least around here. This is an internal high. Look at the low here. So the highest point is this. We want the break of that. Price does it, quickly returns. The small responsible in seconds, and continues to come to make a double roof trick around here. With this, price was working with this, and here it started to go and left you without mitigating that same change. This one that the Nasdaq immediately mitigated, left it unmitigated. Look, like when the price starts to rise again here in the Nasdaq, so that it mitigates that as well. It mitigates it first. The 30 doesn't reach the 50, makes a pullback. It's not able to overcome the one responsible for this small area here, this one responsible right here, and goes to look for the 50, and there it makes a strong change. Then something similar to what happened here. Price makes like a false flip through the trap, takes that out, finishes mitigating something, and then makes the strong change. From 50 it makes the flip, retraces to the flip area, continues downward again until it reaches here. This one responsible for taking us out of these order flow areas, of these hikes. It reaches there in the Nasdaq, likewise reaches here to the 50 of this area, responsible for taking us out of there. 50 of this, and again, look at these hikes. Again, the same from here. There are small continuations in lower time frames until something is touched. Everything around here is liquidated and it breaks with those continuations. Takes out these last internal hikes that were around here. This here, you can consider this the one responsible for giving that volume to take us out, retraces to it, and now reaches to that origin, the Nasdaq. To that origin left from the opening. And from there, this whole drop happens again. So let's see how it looks over here with the S. Look, for example, in the S weakness was already noticeable. This high made at 10:30, which was this one on the Nasdaq. So on the Nasdaq, it arrived to mitigate the origin because it had not mitigated it, and the S had already mitigated all that origin. So look how the strength is maintained in one that still has magnets to mitigate, and the other starts to fall behind, to fall behind, to fall behind, and it doesn't surpass this high. Then this system is very interesting, very nice to see, and apply these divergences based on the theory that we use, not so much with ICT anymore, but more with what we work with. And there were quite a few things through order flow. Let's check here. Seconds. Well, here's the trap. All around here. I arrived later. Quite a few things happened due to order flow. So I first removed this. Then, you know, that when the price is very marked in a trend, what it's doing is validating area after area after area. When we come in the opposite direction, swiping those logos, we will sometimes get a mirror of that, unless it's a position squeeze, a very strong delivery of those streets that don't give pullbacks. But when the price is with low volume, you get something algorithmic, and not so much in the sense of manipulation. Swiping a low and hitting the tap on the area that had validated this pullback. So you swipe that low and give it a boost, and that's how it gets mitigated. Then the same thing starts happening here. So here at first glance, what do we have? Around here, this area is validated to the price with this pullback and continuation. As the price reaches its IP to this logo and gives this super strong boost here, this area was also validated because the price came back to it and then left. Then the price comes here in this drop, its IP to this, but keeps the area and then goes away. Also, how that order flow is given as the price starts to fall again around here. That starts to happen. I over here was looking when we got to touch over there from that origin. This in a minute. The price had reached here to 30, but did not reach 50. So what happens when this boost happens and the price fails to give a continuation and starts to fall? Again, we get from here a flip from this side, and the 50 starts to make delivery. Once I see that the 50 starts to make delivery is when I say, okay, this is the magnet at the moment. When the price doesn't touch the 50 and is around here, I still don't take it as a target because I don't know how long it will take for the price to mitigate that trap again. But when the price starts to give me narrative in that direction again, and I see that it starts to work, the things it is building in favor of that direction, that is when I say, okay, this is going to take effect. And that's how I make very aggressive entries to complete that tap all the way there, when I know that the delivery is happening and everything. But look how one can start improvising with the price. Applying what I'm telling you, it gets there. Perfectly at 50 and the price reacted super strongly, but he didn't even come to mitigate the responsible one. It kept falling. Then 70, sweep this low, another reaction. The previous responsible one couldn't overcome it and left. And it's how the price gets mitigated. In fact, look here. This is the flip, and here too it stayed at 50%, as I remember. Like this, look. Notice this precise tick, replicating the exact previous low that didn't mitigate the 50. And here it does mitigate it with the tick immediate reaction. So look at how algorithmic this is. I'm really a firm believer that all of this is managed by high-frequency algorithms. Yes, there are moments of manipulation if we just want to call them entrances or exits of very strong positions from some institution and you notice a lot of volume in the direction, but most of the time, when the market is calm with normal volatility, everything happens very algorithmically. The price making those taps, sweeps, reactions. And thanks to that, we get those pullbacks that we see in the price. And now it's unable to overcome that. So it comes to hit the other area of order flow. And look how this stayed here at 70% from this origin. So, in a larger time frame, this is the minute tap to the flip area. And here comes the sweep with the double top. This would be the 1 minute sweep separated by 644 here. Here it is. In the way it comes, it rejects immediately. And again, starts falling. And well, then it rises again around here, as we're seeing at this origin, and the strong drop. In this strong drop, the price ends up reaching this area. From here, this whole area comes to liquidate all of this, touches 50, and starts going. The responsible one here. It was left from the shift. We worked on Friday with the Friday review. The Nasdaq had mitigated that structural change. This is what the Nasdaq intended here. If it had mitigated it here, then it did the pullback immediately, 50% of the change, and it went while it had remained. Without mitigating, well, I mean what the Nasdaq did here with the change and the pullback, he hadn't yet achieved structurally speaking. So we had this responsible, and he also has his own small responsibility internally. Then the price reaches that tick perfectly to the internal responsible person, 50%, and there this rise begins again. Then the Nasdaq had reached around here. No, it didn't fall as deep as it is. It reached an area to the person responsible for this around here, to be like a double bottom. But look how, when it manages to reach a target, without mitigating, again, the same thing I was telling you around here, the Nasdaq holds a bit. It doesn't come as deep, because it already has things mitigated. So sometimes one drags the other. When both things are already mitigated, the movement begins, it reaches, mitigates that, and there. The whole movement in the afternoon happened well. A pretty interesting day, as you can see, applying everything we see, the traps, the rejections, feeling multi-temporality, sweeps, everything was very, very nice. Study it well, and I hope that it helps you a lot with understanding how I compare one index with the other. I know it can be confusing at first, especially for those who didn't use it back then with ICT. This tool provides exceptional precision for reactions or when we're unsure about the situation with the one. In the Nasdaq, you find in the S what's happening, what's mitigating the price. The price obviously did very, very interesting things around there, but that's what I wanted to highlight the most. Also, since the recording I was doing just now was cancelled, and I was already quite tired, I hope this is enough for you to review a bit. I hope you all are doing well, and have a great week. Remember that there are earnings reports on Tuesday and Wednesday, from important companies like Amazon and Apple, if I'm not mistaken, and an important announcement on Friday. So it's going to be a really good week. Be patient with your setups. And we'll talk. Bye-bye.